Welcome to the DeFi Standard. This is Patty XRP, and tonight with me I got
Mickey B. Fresh.
So apologies guys for getting started a little late. We actually got some new Polysign videos sent over to us from Darren Moore, so we're getting some clips ready to talk about and show in this live stream. So, um, Mickey, I'm going to hand it over to you for a second while I just get the finishing touches on those ready. You still there, Mickey? Hmm.
Can you hear me?
Yeah, there we go. Okay, cool. Yeah, you were
Okay,
cutting
sorry
out for a
about
sec.
that. So we have these clips again of Polysign CEO talking directly about what Polysign's doing. There's no more whispering. We're not whispering anymore. We know what they're doing. They're telling us the specifics. They're telling us what market they're going after. They're explaining their technology. And you're going to listen to some clips here that might surprise you, and maybe they weren't what you thought Polysign was doing, right? But this is what they're doing. It's echoing what Ripple's doing and RippleNet and what SBI's doing. This is the future. So we have to accept this is the future. This is where we're going. Remittances are not the future. There's a change going on, and it's massive. And I just think we need to pay more attention to Polysign. I have so many videos of whispering. This was this big mystery, and there was so much excitement around it, and there was so much excitement about RippleNet. And now it's like everyone's disappointed because Ripple and Polysign are going towards DeFi and tokenization. So what do you think of that, Patty?
I mean, I think it's smart as a business to be able to, pivot in any kind of direction. Like, a lot of the businesses today, like Amazon being a big one, like changed and has gone into many different avenues. And, people go, I saw somebody make a funny comment about this, like, oh, I guess the peanut butter manifesto's dead.
Yeah.
It may have been Brooklyn, honestly, but basically the thing is, like, yes, that is true. I think starting off, Brad Carlinghouse's CEO really wanted to focus on payments and make sure there's a good um you know solid foundation around that to begin with. And then now that they have everything set up on their back end with infrastructure, they're starting to move into some of these other areas of the crypto markets that are seeing a ton of growth over the past couple of years with tokenization and then DeFi. So, I mean, to me, I think all those things can become synonymous with each other in the future and interacting. So, I like it. I think
It,
DeFi is here to stay. So, I think Ripple should work on that and
absolutely.
utilizing XRP. Yeah.
This has been a long-term plan. This is not Ripple pivoting or anything. Polysign and Brito have been building for 4 years, trying to merge the traditional markets with crypto. When it started in 2017, DeFi didn't exist, but I think they all knew tokenization was coming. They knew they needed to get an institutional trading infrastructure in place for crypto, because right now we don't have that. And Polysign has built it. And they're way up above the crypto custodians now, above your, BitGos and your cold storage. I mean, listen to what Jack says. He basically just talks about cold storage like it's this dinosaur archaic thing that, we have something so much better that offers more flexibility and more security. So I know a lot of you are probably saying, oh, well, that's for institutions. That has nothing to do with us. It's going to trickle down just like everything else. And he even talks about retail is going to be able to play a part in this role with the tokenization and the DeFi. So this is for us too. I think RippleNet, though, Patty, that, they keep really enterprise grade, but Polysign, I think, is going to integrate with both. So let's get into one of these clips here and show everybody.
Cool. Give me one sec to get this first one ready.
Putting them through some of the training that's required to use our products, biometric videos being taken, etc. Once clients are onboarded, our product is quite easy to use. Required to use our products, biometric videos being taken, etc. Once clients are onboarded, our product is quite easy to use in terms of transferring assets in and out of the wallet. We are in the process also of linking strategically to Cowen, who will be handling, at least in the early days, all of the trading asset servicing, so lending, borrowing, etc. That would
Can you
allow
hear me?
clients really a one-stop
Yeah, can you
shop
not hear
in terms
this?
of not only
No, I
custody
can't.
and
No,
holding
Oh,
secure
okay.
assets, but
it's okay. I
That's
know what
my
he
fault.
says.
No, okay. I know how to
Let
fix it,
everyone
but
listen.
yeah. Well, I think if you can't hear it, that they might not be able to.
the extent that they want to
Oh,
buy,
Hopefully
sell,
they can.
I know
borrow,
why.
lend their assets
You
for
guys want to
yield.
hear this?
There will be
This is
certain protocols that we
this is
support
the people
that
who are
provide
going to
staking or other
use
sort of
the financial
DeFi
system of the future. This is the next
opportunities, and
generation
we
financial
fully plan
system.
on being a full
Polysign and
service
their partners
DeFi
and their
supportive
connections are
participant
building the
from our
next
custody
generation
and escrow
financial system.
operations. So really
You know, these are
opportunities, and we
done at
fully
the
plan
forefront.
on being a
They're
full
making
service
connections with the big banks,
DeFi supportive
the asset
participant
managers, the
from our
BNY
custody and
Mellons,
escrow
the
operations.
digital
So it really
banks.
depends, Ashton, about what type of product or
And then you have
service
Japan,
you're
the
looking
security
for,
tokens.
whether we would be doing that natively
There we
within
go.
standard custody or through partnerships with folks like Cowen.
Okay, cool. Sorry, I just got it so you could hear it on your end, but I think you may have been talking over. But do you want to recap that again, Mickey? It was kind of running while you're talking, so.
Did Polysign CEO just say we're going to be a full service institutional DeFi platform that's going to be able to offer staking, yield farming, lending, borrowing, liquidity pools, and 10 different crypto assets that's fully compliant to hedge funds, family offices, for real estate tokenization? That's huge. There's nobody else out there talking about this stuff right now. Nobody offers this. I mean, there's a couple crypto native companies, there's a couple traditional markets just dabbling in crypto, but Polysign has the ability to crack this wide open, actually, if they can integrate a couple other big partners, because liquidity pools are coming. And for XRP and these tokenized assets, XRP is going to play a huge role in all this. So, just like FXRP is going to play a role in Flare, we should be excited because they're going to integrate it directly in there. So this is how you get XRP as the standard, not remittances into, exotic corridors. That's not going to get XRP to be the global standard. That was just to get flywheel going.
Yeah, absolutely, Mickey. And, I just think it highlights the importance of some of these newer emerging markets that are in the crypto space. DeFi really exploded like 2019, 2020 coming on strong, like seeing new networks pop up, whether it be like Solana or Polkadot. And then now in 2021, we're seeing even more. Flare Network's going to come around. We have Cardano getting smart contracts. I think it's very loud and clear at this point, this is where the space is moving to. So it only makes sense for businesses to start building infrastructure around that.
And tokenization is huge. I mean, nobody's really taken the initiative yet. Has anyone really? In 3 years, security tokens have been stuck. There's no liquidity. There's no big players in there. But somebody like Cowen, who has a full prime brokerage globally, they're one of the top 5, full service asset management, full service for commodities, FX. They're literally integrating their whole turnkey solution into digital assets to be native. And now that's how you have tokenized assets. So I want everyone to understand it's not going to be all on the XRP ledger here. Yes, they will be tokenized, but they'll move from the wallet to wallet, not necessarily just on the blockchain. And I think we see liquidity pools with tokenized assets and XRP. This is why there's no need for the XRP price to be set. It's absolute fallacy. It's unnecessary because we have these new tools and innovations. So let's play that second video because he actually echoes what I just said, how the innovation in the last few years has changed so much, and they've integrated it, and they feel like they're very much ahead of everyone else. And he says in a humble way, but he's definitely saying we're ahead.
Well, all right, here's the next clip. So
that seems like something that would be pretty attractive to institutional investors that have a lot of capital.
It's very attractive. You want to fully service the assets that you have and take full advantage of them. And so staking is a perfect example of where you can get yield on the assets that you have. And so I think the attributes of what traditional cold storage can offer are quickly evolving with the whole advent of DeFi coming in, and also the technology that is used to support traditional cold storage is also changing. I think one of the benefits of entering the market now is that, and also the technology that is used to support traditional cold storage is also changing. I think one of the benefits of entering the market now is that we've taken advantage of a lot of the technical innovations that have come into the market over the last 2 or 3 years. So relative to some of the custodians that have been around a little bit longer, we're quite confident and excited about the technology stack that we have. We firmly believe that it affords us a lot greater opportunity to be flexible in terms of supporting institutions and owners of assets of how they want to service those assets, the sort of integration points that we can do, all backed by a blockchain that can securely store each one of those different events, memorialize them on our chain, and also from a regulatory compliance standpoint, be able to offer a much greater platform to gain comfort and trust from all the different participants on both the buy and the sell side that we interact with.
Definitely.
So he basically just told us cold storage, it's going to the way of the dinosaurs for even institutions. It's done. Multi-party computation is the future. It's far superior, and it allows each institution or hedge fund to offer each client their own actual DeFi wallet with security. And then they can integrate to any DeFi application they want. And this is the future. We're going to get them soon too. The HSMs will have smart logic in them. So that will allow them to have smart contracts built into them, kind of like smart programs. So that will allow for the custody platform to do things that a single siloed network, like say Coinbase, it's siloed. They're the custodian of all the assets in their vault. And everyone wants, oh, can I put it in the vault in Coinbase? You don't want that anymore. You want security, but you want access. And Polysign said full service for DeFi and tokenization. So that just blew my mind a little bit at how Ripple that just said, we're doing the same thing. We're going to hand out wallets. Who do you think those wallets are coming from? What custody platform do you think the Ripple line of credit is going to put XRP in? What do you think, Patty?
Probably the standard custody and Polysign solution. Maybe just because of the, little connections they have.
Yeah, just the little connections, right? I mean, the way they described it was it can hold any asset. And I think they're going to tokenize fiat. I really think that's what's coming with that fiat that they receive back. If standard custody or Polysign can then set up those liquidity pools, because you need 2 tokenized assets to be in a liquidity pool. It doesn't have to be on a blockchain. It could be in there, on Polysign or in a smart contract setting where there's XRP and there's, say, Euro, right? Those 2 pools have the same asset. All the ODL user does is swap in and out. They don't care if XRP was $2 and then it went to $2.50 an hour later. It means nothing to them. And the liquidity providers who are putting that liquidity in, they can care less if it's going up or down. If they take a little impermanent loss, they're getting their fees. And I'm sure Ripple's reimbursing them, and they're doing other things to make it worth their while. So XRP's last thing that needs to be a stable. There's no need for that. There is a need for fiat stablecoins, though, Patty.
I mean,
decentralized and centralized in DeFi.
Yeah, and if you think about it, like CBDCs, when they're here, I mean, it's just essentially tokenized fiat with some smart contract capabilities. So the world's moving that way and eventually it'll get here. So, I mean, we'll be at a point where I think it's just kind of natural as those start to come along.
Exactly. But we do not. XRP is meant to be used. There's all these new use cases coming as collateral and to be held in these liquidity pools. Why would we ever want the price to be just set stable? We want it to rapidly continue to increase. And we want more institutions and funds to hold it and hold it. Some want capital appreciation, but he said that blockchain.com specifically, they're the biggest lender in all of crypto. I don't know if anyone knew that. They lend the most crypto assets out on the market to market makers and liquidity providers behind the scenes. It's interesting because maybe they'll provide some type of hybrid retail solution, because they're trying to be an exchange too, and they're going to bootstrap off of Polysign and be able to offer probably all the different assets. They'll connect to every exchange, and you'll just have a custodial wallet with a dApp store instead of an account at 40 different exchanges and all over the world, you know, and you got to do the best price feed, get it, hope it goes through. With that, you have one wallet, it's secure, and it gives you access to all the data, and then it can link to all the DeFi protocols too. So these wallets are going to be abstracted. Like, that's what I'm most excited about, because I think that's when we grab mass adoption. That's when grandma could use it.
Yeah, absolutely. And I see a comment here that I think I'd like to address, and you can too. So Ben saying, I doubt institutions going to let retail investors participate in making money. These guys going to mess this space up for sure. Just watch. I mean, the thing is,
I hate that attitude.
yeah,
Why?
we already
I'm
have
sorry,
DeFi.
I'm not trying to be rude, but we have DeFi. Why would anyone say they're not going to let you? He just said our thesis. I'm not trying to be rude, but that's just an ignorant comment, because the thesis Polysign just said is for democratizing finance. That was his specific words. They need retail's liquidity. That's the mistake. Everyone thinks the banks don't want retail in. No, they want the good retail in. They need liquidity. They need more use cases as possible, because they can't just be the only ones. If they're providing liquidity, they need somebody to use the liquidity. And if they're borrowing assets and then using them, they want retail there and tokenizing the real estate. He said it, Jack McDonald. So why would we be excluded from something that we already dominate right now? So yes, there'll be an institutional side, but Ripple says it in their job descriptions. Ripple has said it since day one. XRP Ledger is a public, decentralized network. It's permissionless. Government can't do anything. SEC can't do anything. Why would they not want retailing? They're just going to build services and applications and interfaces for the masses to integrate with, because the innovation and the yield is so high. They're going to get you in. They're just going to take a cut. So sorry to be rude there. It's just that he was so adamant about it being democratized.
Yeah, I mean, he specifically said in one of the other interviews on like an older video that we put together that they want retail involved, especially with like tokenizing real estate and the REIT funds. So, I mean, to me, the whole economy isn't like that great for the entire world. So the more value that can be unleashed, unlocked, is just going to help everything else that's going on, and hopefully release some of the burden that's just piling up on top of the central banks, the institutions, the governments. So I think trying to get as much money out there moving, being lent, being borrowed to stimulate the economy is kind of one of the ways to maybe get out of a sticky situation where we just have QE from the banks ad nauseum. So to me, I think it's very important that retail gets involved. And I mean, the whole thing with DeFi is it's like converging the institutional markets and the retail markets. I mean, that's what's being built right now. Like, it is happening in live time, and we can see that with Polysign, and there are many other firms that are working on this too. So yeah.
Yeah, and that recent securitized partnership with Liberty, I just sent you the link, Liberty Capital, they're tokenizing commercial real estate, which comes with cash flow from the tokens that are created from these different commercial real estate properties. The rent is paid out in the tokens that are offered then to retail. Yes, it's white label, it's securities, but this is the new types of innovation that are coming. And he even said it, tokenization and DeFi is going to swallow crypto speculation markets, swallow it whole. So what we have now is just going to be thought of as the early days. This is all going to change. And these exchanges and their markets and, their order books, Coinbase does shady things. I do believe Gensler is right. They offer their proprietary data to the corporates to get them millions of Bitcoin somehow without moving the market with bots. So what Polysign's doing is they're going to have a prime brokerage behind the scenes that will allow to connect to different exchanges and offer their customers, hedge funds, the best prices without having them have an account on every exchange. And a lot of these exchanges aren't fully trusted. You know, there's a few, but you know, Huobi in China, you know, is a hedge fund really feel comfortable doing that? Or in somewhere like Hong Kong, is that where they want to be? No, they'd rather be with a regulated entity who they feel safe with and secure. And I don't know if you picked up there, he said biometrics and video. So basically to authorize, you're going to probably have to do some type of like basically voice, video, or biometrics, which I think is awesome because that eliminates any possibility of fraud or getting hacked.
Yeah, absolutely. And K-Spec had a question about Polysign, and I just had it. Okay, so he was saying he wants to know, is Polysign the one that would be doing the tokenizing of assets? And then also, could Codius be the preferred smart contract platform to transact/settle derivatives in the future?
Very interesting, good question. So Polysign is the parent company. Jack called Polynet the actual like institutional orchestration blockchain layer where they could memorialize, which means they could store transaction records on it. Now, I would think Standard Custody as a digital bank and Cohen Digital Asset Management and all their subsidiaries would be doing that. And I think there's other partners. Jack said they met with 35 different banks and institutions in the past, he said like 12 days. So they're actively, creating a partner network. They also have white labeled these solutions. So yeah, I would think it could be them. It could be somebody like Anchorage or a different blockchain.com, but it probably would be done on there and possibly on the XRP ledger. And what was the last part of the question?
Just about Codius in general, how that could fit in.
Okay. So I do think Codius fits in with the smart Oracle infrastructure. So the hosting that's going to be needed. So there's going to need to be a way to pull data from all these exchanges and to communicate. Now, we don't know what smart contracts are being run on this. It's possible it could be like digital asset DAML, which is digital asset holdings, which is made for capital markets. I'm not really sure. Codius is just a hosting protocol. So keep that in mind. It's not a smart contract language. It's not a platform. Can it be configured in an enhanced future version? Absolutely. And it might play basically the data provisioning network. And it might bridge to the traditional markets. You're going to have to pull stock feeds in. So if you're tokenizing all these assets, you're going to need price feeds for them from the NASDAQ, from Bloomberg. Say it's a Japanese from the, what is their stock exchange called? The Nikkei.
Yeah. It's like the Nikkei, yeah.
So Codius hosting nodes can play a role, but really, I think they're going to evolve into autonomous economic agents where they're just smart programs that can operate between blockchains and manage different wallets and actually manage, kind of themselves. And Chris Larson has talked about that. One day in 2013, he said, you're going to have autonomous agents, machine to machine. That's where I think Codius will go. And we're very close.
Nice. And I actually have a follow-up question that I was thinking about that may be helpful for everybody in the stream. So, as you know, Polysign has its own proprietary blockchain, which we think is called Polynet at this point based on the interviews. How is that going to interact with these other blockchains out there? Whether it be possibly Ethereum or the XRP ledger or whatever it is in the future.
Okay, this is kind of a tough question.
Yeah,
From what I've gathered from this is they're using new standards called like unique identifiers, and they're able to basically run nodes. So Polysign says they run on 10 different blockchains. So they're running probably their own infrastructure on those underlying blockchains, those 10, right? Mm-hmm. Now, they're having a wallet that's going to be on their blockchain, and it will allow the users to hold all different wallets, all different assets. And now remember, it's going to be a hybrid. We're not talking super decentralized here. But the assets themselves will be interoperable between any blockchain, because it's on, like, think of it like kind of a layer 2 above everything, and then it could tap down. And they have this technology called crypto conditions, and that's Interledger. So this is where the internet of value comes in. Interledger has the ability to run crypto conditions, which are like smart contracts, above each blockchain, and then tap into the underlying blockchain's verification system. But it doesn't need to have the business logic verified by the entire network publicly, but it could use cryptographic hashes, just like XRP Ledger's sidechains will. And this is the future, and it's why Codius and Stephen Thomas, they said, we're not putting this into the XRP Ledger, because one day we're going to run all these smart contracts above all the networks in distributed applications. And now that's kind of the future. So we're going to have distributed applications and middleware that's going to go above all these blockchains. The users won't have the full access of the ledger the way you do with some wallet. You know, that you're not going to have. And you might not have the full capabilities of an Ethereum wallet, but you'll have the ability to be an on-ramp, off-ramp, digital identity, and you'll have all these assets held there and no private key to worry about. And you'll be able to integrate with any application you want to earn yield. So I don't think it's going to be a race of, this blockchain, that blockchain. I do think that the value of each underlying asset will matter, but if you could abstract it, it kind of eliminates some of the problems. But honestly, I'm going to tell you, I don't know exactly. They haven't put out details, so.
Nice. Well, I think that's a pretty good.
I don't want to say too much.
Yeah, I mean, as far as just, I was kind of looking for how you thought it could work. To me, like how they talk about the memorialization on Polynet, like that has to do with it, reading changes in the state of other blockchains and recording that on its end so it knows what to do based on certain criteria that's been fulfilled. But I do so. This is an interesting comment, and I think kind of could go into another discussion here. From Desert, he says it seems like long term, we will benefit. Like years from now, the potential for Moon or whatever exists. Shorter terms, volatility is not for the faint of heart. And yeah, I'm with you 100%. Like to me, it's still some time off. Before we get to like whatever your vision of Moon is, maybe a $10 XRP if that's your vision of Moon. I don't know if we have to wait like years for that, but for any kind of crazy prices that people don't think are possible and things like that, there's just so much more that has to be built out. And right now, the facts are, we're in a very volatile market for basically all the capital markets out there, and then with crypto even more so. And it's much harder to like weather the storm in the short term, which one of the nice things, it's like, okay, so Polysign's doing all of this, and yeah, it may not be a direct thing that we can all participate in at this time, but you can just start seeing the infrastructure that's being built around the crypto space. And stuff like this is going on maybe not the exact same thing, but different institutions are working on different blockchains. So like they're not spending the time to build all this out because it's not going to be a part of the future. So it's like, weather the storm for now and participate in what you can. That's why I think DeFi is such a great thing, is because, while we weather this volatility storm, we can at least make some yield on our assets, which is not something, you can really do in the traditional markets right now. As far as, aside from price appreciation for the most part, because I mean, the bond market is, pretty much non-existent if you want to get any kind of return on your money. And yeah, so I don't know if you have any thoughts on that, Nikki.
Hold on, let's get back to the screen.
Oh yeah, yes. So it's around.
We have this great thing called DeFi, which is opening us up to yield opportunities and all these abilities that I'll take over a quick little pump in capital appreciation, because now we have the tools before all the wealthy and rich do. And that's how traditional markets worked. The unbanked, the middle class and low class didn't have the capabilities to borrow at will, to have all those financial products and have those capabilities. It was like the hedge funds met in the Hamptons on the weekends and talked about what's going on. Now we have a fully transparent DeFi market. It's young, but as it matures, we're going to have multiple yield streams. Like, we have to change our mindset and, think we got to put the value to work and use it. And if you don't, you'll sit there and you'll wait for cap appreciation. But this is the mindset that I think the smart money in the industry, in the market, has to realize. And they'll look back and they'll see it as regret. So right now, learn as much as you can. Ethereum is a gas disaster still. And I heard their new protocol is causing problems with the miners. But we have things like Flare, Cosmos, Avalanche, Polkadot's going to be huge. So there's all these projects that are coming, and they're rip-roaring in development. Huge projects with Polkadot and Flare and Cardano. So I don't pay too much to the market because I'm going to be here for 10 years. And I'm just going to keep stacking my wealth, setting up yield streams, and then slowly diversifying as the core few assets I have start to gain in capital appreciation. But I think the 2018 mindset that XRP is just going to just blow up and be used by like central banks, that's not something I'm focused on anymore. If that happens, that's great. But I'm trying to learn how to put these assets to work. And people have made millions doing that. And governance tokens are going to be huge. Like YFin, if you grab some, could be a gold mine for you. So I think that we just have to shift our thought process and take advantage of what's there. If the institutions are going for DeFi, then you should be going for DeFi too. Because it's not like they're going to have a special DeFi. It's going to be the same type of DeFi, probably more conservative, and will have the extreme opportunities. So I think it's better because it gives us more chance to accumulate. And we should talk about RippleNet because RippleNet's doing this all with the wallets now. So in my opinion, it could happen pretty quick, Patty. I think we could see, XRP get put out in the front as the standard faster than, it looks at the moment.
Yeah, absolutely. I mean, to me, like, we're seeing the building blocks be put in place for like this new era of Ripple, but there's just one lagging thing that's kind of holding it behind the scenes.
Chase.
But some of this is already getting rolled out, in Asia and South America in different areas.
Mhm.
So it's starting to happen, but before you get all the countries involved with what they're working on, we got to get over that one last hump that seems to be holding it back.
Exactly.
And we also
don't focus on banks using XRP. Like, that's definitely kind of message with your head. They've had plenty of solid partners that are, going to be unicorns. They are forward-thinking digital FX providers, digital banks, digital payment providers like Instagram, Noin. And there's many in different corridors, Flash FX. They're building banking as a service products. They're building on top of RippleNet to offer other type of applications. RippleNet is a platform so that others could offer applications. It's not just everyone uses XRP. No, they need to create applications to offer their customers and others in the industry. And that's how you take over Swift, because you have them building on it. And that's what they've been doing for years. So I'm just not sitting here thinking they're going to do that. But hey, if they're getting everyone a digital wallet with XRP in it, that's pretty damn awesome. Because I don't see anyone else doing that anytime soon with any digital asset.
Yeah, absolutely. And so here's an interesting question from K-Spec. So he said, when it comes to DeFi, do y'all think that the governments will allow these alternate financial economies outside of, well, it's saying it on my end. Okay, cool. It should be good now. But yeah, as far as that goes, I mean, we're definitely going to see regulation that's coming in one way or another. Now, they can't necessarily just shut down these networks if, whatever they're trying to shut down is truly decentralized. So that, they can make it illegal to transact and all that stuff, but people do illegal stuff all the time and the government can't stop it. So that's kind of, how I think about it. And, yes, we can make money on loaning to each other, but the institutions can be involved just as much. And if they have more capital, they're still making more money than we are, like in a system like that. But Mickey, I'll pass it over to you for your thoughts on that kind of thing.
Yeah, absolutely. I mean, there is going to be a crackdown that's coming, but let's be real of, well, what is the crackdown? It's the travel rule. The travel rule says if you I think it's over a couple $100 now. You just need to have verified KYC to be using that protocol. So when you connect to a DeFi interface where it says connect wallet, that's the endpoint. So as long as you're KYC'd and you're verified by some entity that's regulatory compliant, there's nothing illegal that you're doing. They can't crack down on that. The regulations are actually going to adopt the technology because they're going to embed it, and they're going to realize, oh, we could do reg tech, we could do, cipher trace, chain analysis. They're going to adopt the technology, and they're not going to stop tokenization. They know tokenization is what's going to give CBDCs just a chance to succeed. They go with each other. So XRP is not going to settle derivatives. Right? I still don't understand that one. XRP is going to be valued, but derivatives don't get settled by XRP. New types of derivatives will be created by DeFi. So here's where the exciting stuff comes in. The CFTC put out a presentation, and they were giddy, the whole commission, about this technology because it's more efficient trading. We have more liquidity. So now everyone can be a market maker, not just a few big entities. And it basically democratizes the financial system. So what is really illegal on DeFi right now? It's just basically the travel rule. That's really the biggest thing. And DAOs are going to now be LLCs. So these are going to be the future of possibly decentralized banks. But there could be a crackdown. But Gensler's crackdown on exchanges doesn't apply to some protocol on the internet that's in UK where the devs are. What can they do? I mean, there's nothing really illegal going on. As long as there's not too many rug pulls and they could get the travel rule in there, we have digital identity standards ready to go. Tokenization is going to add to the composability, and I think it's going to be a big bang, like a big bang once institutions could come in. I mean, they're banging at the doors right now. And Ripple has the advantage. They have the XRP. They could lend out to boost the whole adoption. And that's what the power of the escrow is. It's not selling it to the government. It's not selling it to keep the lights on. It's that they could facilitate as a credit lending facility.
Yeah,
and they could create fiat liquidity pools. So, SBI, also, I just want to throw in there, they have a multi-party computation wallet, and it's on their own website. So, how we don't hear much about SBI VC? Well, they created a custody platform too. And then they created Blocksets, which is literally a whole infrastructure to offer turnkey white label solutions to traditional markets. Single API, and they could connect to all the different nodes on all the different blockchains and offer their customers all wallets. So that's the type of infrastructure that was needed to bring in institutions, and now it's there. I don't know exactly what standard custody is going to do regarding XRP and RippleNet. That's kind of, we could speculate on, Patty, how involved they'll be with that. But I know, don't be surprised if they do focus on Bitcoin in the beginning.
Yeah. And I want to add something else, kind of this general conversation about, like retail being involved. I think people severely overestimate how many people are actually getting rich off crypto, first off. And then second off is we're going to be in a future here, not too long from now, like I'd say 10, 15, 20 years down the road, where a ton of people are going to be out of work from automation and advancements in technology. So all those people are still going to need to be supported in some way, and if they're now able to do things like providing financial services through the internet, and then all different kinds of businesses, like you could game and run a business in a game possibly in the future, like that is stuff that's going to be needed. Otherwise you're just going to have like an extremely lower tier of society that's not going to be able to function at all. And I think things could devolve very quickly in that kind of situation. So like there needs to be new ways to create wealth and capital for people to have and live their lives. So to me it's just like I just feel like it's way overstated that like people, really wealthy people are concerned that like, less than 0.001% of the population getting very wealthy as well. But yeah.
And absolutely, I think everyone asks, well, how are we going to get out of debt? They're going to be a debt jubilee. They're going to need to create value just to pay it off. No, we need to create new value and unlock illiquid value and open new types of value that's programmable. And that's what real estate tokenization will do. That's what a metaverse and gaming and NFTs create new types of value, new types of business models, new content for even like, the whole music industry got crushed in the early 2000s. Now you could create actual online social value. You could create all these new things that come with, not just DeFi, but with blockchain and smart contracts. So the hedge funds, capital markets, they're not going to sit there and say, oh yeah, I'm good with this negative percentage rates, and just look over and say, well, now there's institutional DeFi options. I'm just going to sit around and wait. And 100 crypto custodians didn't scramble to implement infrastructure in the last 8 months because, they're going to wait for 7-8 years. I mean, they have to get customers too, just like the banks need to convince customers. So one at a time, but I think that we're in the best asset right now. I'm super bullish on XRP. I think Ripple has positioned it beautifully. I think that Polysign is going to position it great, and I can't see how we lose this case. So I'm bullish. And then we got Flare.
Yep, absolutely. And before we're getting close to 45 minutes in, but Mickey, I just wanted to go over a couple things about the F asset system to finish up.
Can we do one last clip, or do you want to wait?
So that clip has still not sank or it didn't sync on my end, so I can't get it
Okay,
up.
skip it.
Yeah, we'll have to show it another time. But I'm going to take us over to our website, and we have a page for the F asset system, and just a couple things I want to point out around, like, I guess I would call them security features, last resort type of stuff. But basically with the F asset system, so in one of the blogs, the Flare team states that the F asset system is centered around two main ideas, which are agents will always have more to lose by defaulting on required actions rather than honoring them. And then also, there are strong incentives built in for others to rectify failing positions. So, those are kind of like the two pillars of the F asset system. Um, One such example, which we have gone over before, but I just kind of want to reiterate of this, is the fact if a redemption failure occurs when you're trying to get like your XRP or your Doge or Litecoin back on the original blockchain, the agents basically, even if, XRP, let's say, was up at $100, they still have all this collateral that's backing that value at 2.5 times. So the F asset system will automatically burn around 40% of their collateral on a position, which means if they run away with these assets, that they're still losing out. So it doesn't make economic sense for them to run away with your XRP or your Dogecoin, Litecoin, or Stellar, because they are still, the economic benefit is going to be, negative for them. So that's a huge part of it. And then also, if one of these agents on their collateral position, if it starts falling below this 2.5 times collateral rate, then they will get something called a collateral call band, which gives them a couple minutes to top up their collateral position. And if they do not do it within that required time period, then the F asset system smart contracts start taking Spark out of their collateral and purchasing the F asset that it's backing off the open market. That F asset is returned to the system and it closes out against the Spark collateral they have remaining until they are back into a 2.5 times collateral. So, it's not like if these agents fall below the collateral ratio, nothing's happening to them. Like, they're going to start losing the collateral they do have once it gets like 0.05 below the 2.5 times collateral ratio. So those are a couple security features I just wanted to like point out that I think are very important in, like, ultimately if you decide to mint F assets or not, that at least there's some stuff on the back end that is meant to protect you. But
Yes,
yeah, I just wanted to point that out. Yeah.
It is the only truly trustless bridge to bring legacy crypto assets over onto another chain. and they still hold technically or have access to the underlying asset. So FXRP is not a synthetic, and Hugo has said that. So this is safer than wrapped Bitcoin. We don't know the full details in the back end, but they're all going to be regulated entities. So that's definitely something I think it's difficult to wrap your head around, and hopefully we get more information on that. FXRP is probably a superior asset for retail to hold than XRP, and that might sound crazy to many of you, but the attributes don't lie.
Yeah, I mean, honestly, it kind of almost seems like any smart contract network that's letting you earn yield on your XRP above anything you could do on like Nexo and stuff like that is better than the XRP on the XRP ledger for retail, because you still get access to that price appreciation plus, the DeFi yields. But yeah, I think this is. Did you have anything else you want to touch on, Mickey, or good to wrap
No,
up?
just the fact that Ripple's talking about NFTs. I mean, they're at the forefront here. And, for 2-3 years, they kind of ignored what was going on in crypto. They just X current and all this stuff. And it's really nice for me, as an investor, and it's been over 3.5 years in XRP to see, hey, now they're really, pulling their weight, and they're making a forceful thing in the middle of an SEC case. Like, they have a network of 300 institutions building on standardized API, on software, and they have the pay string standards, and they have a Polysign digital bank on custody. It's like, you know what? Now it's when, what was Brad Garlinghouse's favorite line? Now is when we push our advantage or press our advantage, right?
Yep, absolutely.
And then IPO time's coming. So this is in the next year or two, they have the opportunity to put XRP in a position to be the standard. It's just going to happen a little differently than, I think that was expected, 2 or 3 years ago. All these wacky theories, I don't think are going to happen. If they did, I would love it, because I'd be rich too. But I think DeFi is the thing we should be focusing on. When Brad Garlinghouse is telling you that, and Polysign CEO is telling you that, I think that's what the focus should be on the community.
Yeah, I'm definitely with you. Take your your future and your financial future into your own hands. I think that's like one of the best things about this entire space for me, is that it's very much up to what I do and make of it at this point, which I as a proposition I really love.
Yeah, and it'll get easier to utilize. Right now it's just early, but soon it'll be very easy. You'll click a button on a wallet, put your thing in here, you earn this yield, composes with that one, and now you got 3 yield streams coming, compounding each other. Cool. This is the future. I'm just psyched. Finally to see Polysign come out of the woodwork, out of stealth, to see Jack McDonald out there on DeFi podcasts. This is the moment of truth the next year or two after the case.
Mm-hmm. Well, I think this is a good point to wrap it up. Thanks for tuning in with us tonight on Thursday. We will be releasing a recorded video tomorrow afternoon with the Chief Technology Officer and co-founder of the Panther Protocol, Dr. Anish Mohammed, who had a hand in working on some of the early Ethereum documentation, and additionally was a Ripple advisor for 5 years and has been in the space for a long time and advised a lot of different projects out there. So I think it'll be really interesting to get his perspective on DeFi and the crypto space, as well as get a lot more information and in-depth on what the Panther Protocol has to offer, as it will be launching on Ethereum in Q3 of this year. So I mean, probably in the next month or two, somewhere in there. I'd say August or September, it seems like. Cool. Yeah, thanks for joining. This is the DeFi Standard. I'm Patty XRP.
And we're now financial advisors.
Oh, yeah.
And I'm Mickey B. Fresh.
Yeah, absolutely.